So, guys, the government shut down and the market doesn't seem to give a damn. What's going on out there?
The market loves it, man. The market would rather the government be shut down than be open, I think. I think maybe that's true for all of us, not just in finance and markets.
Things are more
Absolutely.
peaceful.
Are
Shut it
they
all
though?
down.
I don't know
No,
about
I don't
that.
know. I mean, it's just like nice. I don't know. It's kind of been nice not having the data to follow for like, it's just nice to get a break from it all, I guess. The constant inputs, but I don't know. Some people would probably disagree with that.
Well, stocks seem to like it. Gold is going parabolic today. Bitcoin just tagged a new all-time high earlier in the week at 125. Yeah, man. I know you guys have been super active. Well, I know Trav has. Nikki, you've been working with your clients a lot so far this year, and I haven't been trading a whole lot. Just been kind of riding the bigger trends. But I know we've got quite a bit on the docket. What do you guys want to start with? What do people really need to know about what's happening right now?
I feel like we should start with gold. You know, first of all, we
I
know
like gold.
what do you think Peter Schiff is up to right now? Do you think he's like popping bottles of Dom and just patting himself on the back? I think gold has been very interesting, and congrats to Schiff, clearly, and anyone else who was buying gold. But I'm hearing a lot of like conflicting feelings about it. And Trav, I would love to hear your thoughts on this. That this run is almost a warning sign, and the distrust of the monetary policy, distrust of the treasuries and the treasury markets, and people not and the dollar, just the whole shebang, right? That the demand won't be there for treasuries, and everyone's kind of moving over into this asset instead, gold. So I do hear those concerns for sure. However, on the flip side of that, I'm also thinking, okay, well, we now have the stablecoin world really opening up. They're buying up treasuries. We have Bitcoin also. That is, I guess, going up with gold as well, which is probably for the same concerns out there. Are you concerned about the dollar, about monetary policy, about our fiat system, to where you're feeling like all of this gold run is super justified? So that's kind of my question.
It does seem like the quote unquote debasement trade has now become very popular and in vogue, and now like the financial media is calling it that, and it almost makes me worry that it's about to have a big pullback, because it almost seems like too obvious and too, just like
Convenient.
yeah, popular and convenient. So obviously, I think that is still going to be like a mega macro trend. It's not like Lynn Alden always says, this train doesn't stop, and I think that's true. But of course, the prices can get a little ahead of themselves in the short run, whether it's stocks, gold, crypto, you name it. We know there's cycles, especially when it comes to prices. So yeah, I think the debasement trade might be a little bit ahead of itself, with gold having its second best year ever, stocks continuing their third year of really good gains. And in fact, pockets of stocks are just ridiculous right now. You've got like no revenue quantum stocks that are at $20+ billion market caps. Pretty much everything is like anything in an exciting theme has just been pumping and pumping. It's space today with Rocket Lab and ASTS. Yesterday it was like rare earth mining companies. Before that it was AI data center plays. It's something every day or every week that's pumping, and it just feels like everybody's posting screenshots again of their portfolios crushing it. And we've been fortunate enough to do pretty well ourselves this year, but when we get these indicators, it always makes us a little nervous that like, hey, we're probably due for a nice, good, healthy pullback, and we need to shake out some players that are getting a little bit too confident in themselves.
I think that's the concern, is that a lot of investors are looking at that gold chart and they're thinking, crap, I didn't get in, I wasn't in. And then you got Schiff saying we're going to 5,000, and I believe this trend can continue longer than most people think in gold. However, we also know that gold can have very, very vicious pullbacks, right? And it can be very volatile. So I would say, from my perspective, to be cautious. This has had a huge run, and it really hasn't cooled down much at all. And so try not to FOMO in and have consideration for sizing when you're looking at something like this that's already been up so much. So that's just kind of what I wanted to say, because I do feel like a lot of people are looking at this feeling a lot of FOMO.
Yeah, when you look at the chart, 4K is actually kind of a major Fibonacci extension zone too, and a measured move of the prior range. And then like when you zoom in to the last, let's see, gold's been green 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row, and it's actually accelerating into 4K. So yeah, I agree with that. I mean, in the short run, this thing is definitely getting overbought and overextended. But that's the thing with parabolic moves, like you never know how far they can run. I mean, people can just run these things up. One thing that I thought was interesting though is I was watching an interview with some physical gold shops, and they said right now for every one person that's coming in to buy physical gold, there's like 8 to 10 that are selling. So that's kind of interesting on the retail side. You know, mom and pop are like liquidating their gold, but on the institutional side or the government side, it's hard to know like exactly who's like stacking behind the scenes. Kind of similar to Bitcoin, right? We've seen a lot of institutions and governments and stuff start to accumulate, and that's become a tailwind for Bitcoin as well. So I think, yeah, it's just interesting to see all these hard assets going up at the same time. Also, with all the speculative stuff that Tribe was talking about too, right? Like, you know, the rocket labs and the quantum stocks and AI. And at the same time, we've got a very strange and risky like employment situation that I know we can dive into there too.
I saw a funny quote the other day. Someone said that we're in the middle of an alt season right now. It's just not in crypto, it's in stocks, which I think is perfect.
Yeah, it's true. Stocks have definitely been outperforming shitcoins, which is, you know, it's kind of interesting to see because last couple of market cycles, it wasn't that way. But if we look at, you know, others, which is like large or excluding the top 10 cryptos, you can see, I mean, this is still, you know, well below prior peaks, where total two, when all you do is if you just exclude Bitcoin, you can see that is close to, if not at an all-time high. So large cap crypto absolutely kicking butt this cycle so far, but alts on average still underperforming. But you know what was also interesting is, you know, taking a look at like the Russell, right? So this thing has been coiling up. Small cap stocks have been coiling up for a long time, and this has been kind of my signal, like, are things going to get weird? And as of this week, it's testing all-time highs. So that just shows you that small cap stocks are absolutely just ripping right now. So is that sustainable or is that a bubble? And I know that was actually the title of our last show. Has anything changed over the last month, or are things just kind of clicking along?
Yeah, you know, interestingly, so we actually have had some economic data that's been a little bit worrisome, but that has also been good news on the interest rate front and the Fed cut front. So it's like, you know, it was almost like bad news is good news again, because, you know, the market wants to see rates go down, and that, you know, that's helping like the, you know, the whole financial markets complex. But yeah, I mean, there are some cracks underneath the surface that are, you know, get you a little bit worried. It doesn't mean like we're about to fall off a cliff necessarily, or that the market's due to crash, but there are some warning signs that I'm slowly, you know, paying attention to and tracking. Things like, you know, CarMax reported earnings and had higher loan losses than forecast on some of their auto loans. We've seen student loan delinquencies spike a lot higher since they resumed payments on student loans, and there's signs of other like stress among some of the lower income consumer cohorts and consumer spending, and there's just a few other data points out there. And then we've had some, you know, weaker unemployment stuff. They revised the jobs numbers lower. We didn't get a jobs report for September yet because the government shut down, so we'll have to see what that looks like if it ever comes out in the next, you know, I'm sure it will come out. I'm sure they'll come to terms on the government stuff in the next couple of weeks, and then we'll get that jobs report later in the month. But obviously, we're also going to move into earnings season, so we'll get a lot of real-time data from companies on what they're seeing out there, and that's going to be really important to watch. But yeah, I mean, I think there is still some background worry about a stagflationary scenario where, you know, we've had inflation uptick a little bit. You've got a big wealth effect coming from the stock markets and AI. And at the same time, you have, you know, some worries about jobs. unemployment and just the overall economic backdrop for some classes of consumers. So that's something that I think isn't necessarily like spooking the market at all right now. But if it were to intensify or get worse, then that could be something that starts to pressure the bull market. And we are getting a little bit longer in the tooth in stocks in terms of the bull market. This will likely be the third straight strong year of stock returns, particularly in tech. And so, those are some of the risks I see. There's also, of course, the whole debate about the AI bubble and whether that could pop and cause a huge, downdraft in the market. And so, that's something we can talk about too. But there are a lot of people believe that is going to be the next big catalyst that's going to cause us to have a shakeout or a sell-off.
Yeah, this is a chart that's been going around for you guys just listening to audio. We're looking at a comparison of the S&P 500 price chart compared to job openings. And when you go back to, where the bear market, the scary bear market of 2022 was, that was where, job openings kind of peaked out as well. And as stocks have continued to go up, job openings have just continued to go down. I thought this comment was funny. Somebody said, when was ChatGPT 4 launched again? And it was right around that time, I believe. And I guess this is the biggest question, right? Is like, what is AI going to do? And then Fred Krueger posted a lot of the top job categories. And he said, get ready to lose your job. Everything from driving to doctors, surgeons, teachers, lawyers. Like, I think maybe this is like one of the biggest, not black swan because it's a known event, but just biggest like systemic risks to the system, right?
Can you go back to the jobs chart real quick? Because I do want to just make a few points. I kind of take issue with this chart for a few reasons. The first reason,
is it chart crime? Chart crime?
I'm going to call it a chart crime. I'm going to declare chart crime here because, first of all, with the job openings, we have to think about what happened during COVID. We had this huge spike in demand due to stimulus. People were hiring, like crazy after the dip, right? The recovery was massive. So I'm seeing the job openings more so as a normalization, kind of trying to get back to a normal trend. Granted, AI did not help this decline, and it's probably not going to help job openings get back to trend, right? And that's where we really have to pay attention here is, do we tick back up and just kind of chug along like we did prior to COVID? Or is this a true shift in the jobs market, the labor market, that is going to be really, really painful for the economy? Now, on the flip side of that, why is the S&P up? The S&P is up because companies have AI. Granted, they're spending a lot on AI, right? But the market sees, hey, these companies are going to become more efficient with the labor that they have, right? So that means potentially profit margins continuing to stay higher or trending. So I don't know. I think that it's a bit of a chart crime for me, but I just wanted to point those things out. The normalization of the job opening trend and how AI is essentially kind of helping these S&P 500 companies with the labor that they already have.
Yeah, so that's kind of, in my mind, like fueling the bifurcation between the labor class and the capital class, though, right? Like,
for sure, 1,000%.
And that I see your point about the chart crime, but also it's like, well, is this just an early sign of the cracks forming, and like how fast is the job market going to implode? I don't know. Trav, do you have any other thoughts on that?
Yeah, I mentioned before one of my bigger worries over the next few years is that if we get if and when we get the next recession, that job cuts will intensify because of AI displacement. So companies will reduce headcount initially because of the recession, because they need to cut costs, and then they'll realize that basically that they can fill a lot of those job requirements or job tasks with AI tools that are cheaper. And so then that becomes a problem, because coming out of the recession, you don't have that uptick in jobs and companies starting to hire aggressively again. You just have a very weak extended employment market for, as far as the eye can see. Now, maybe I'm just wrong about this, because I do think like history kind of shows us on a longer term basis that, big technology disruptions may eliminate jobs in the short run, but they also create a ton of new types of jobs. And so I'm still pretty optimistic that that will happen with AI. And I think a lot of companies are, trying to get people to utilize AI with within, they're not firing people to necessarily displace them with AI. In most cases, they're trying to like do more with less. So they keep their existing employee base, they give those employees AI tools and tell them to be more productive. And that would obviously be a way that the worst case scenario doesn't happen as well. It's like, yeah, maybe hiring's not super, super strong, but you don't have mass layoffs with people getting displaced by AI. And so, yeah, if you don't have, mass layoffs and AI becomes a productivity boost, and then AI eventually creates new types of jobs, and that would be, that'd be the optimistic scenario. And we just don't know enough right now to say if one's going to play out or the other. Again, history kind of tells us that most technology disruptions do end up creating new types of jobs. So that's the optimistic long-term view. But short run, I think there can be some messiness here, and especially if we go into recession, I do worry about, now all of a sudden companies looking at AI tools as a way to not rehire people, and so that could make things worse in the short run.
I want to believe that narrative, right? That it's not AI that's going to take people's jobs, but it's people using AI that will take other people's jobs. I want to believe that. But again, whenever I look at a chart like this, and it's just like you think about how many tens of millions of jobs, drivers, 12 million potentially unemployed, coders, teachers, like, why do we need a fifth grade math teacher in every neighborhood? Why not just have 10 that are the best in the world teaching through, the internet, right? So I don't know, man. I do know, like in history, technological advancements have just kind of changed and created new jobs. I'm just like, is it gonna replace, or are we gonna have enough jobs to replace all the ones that go away? It's a freaky thought, man.
Yeah, and with the drivers, it's interesting. I'm seeing so many Waymos on the road here in Central Austin now. Like literally by the week, it seems like there's more and more. And I'm seeing, and I think I'm even surprised by how quickly some of those autonomous vehicles are replacing some of the Uber rides out there just in this local market. And so if you roll that forward, in the next few years to all the cities they're expanding to, yeah, I mean, why wouldn't that displace 50% of Uber and Lyft drivers in a matter of 3 or 4 years? I think the potential is there for that. And so, yeah, and that's just one example in terms of job category. So, yeah, again, I think short run there are some scary scenarios out there that AI eliminates jobs faster than it adds jobs in the short run. So. But again, I don't know. It's like, who pays for that, right? Like, so at a certain point, if you eliminate too many jobs, consumer incomes get crushed too much to really be able to afford the products that AI is driving. Like, who's going to be able to pay for an expensive Waymo ride if they don't have a job? So I don't know. It's kind of a circular economic relationship here that we have to think through that I think is not always obvious. It's like to eliminate all 50 million jobs in a decade and still have the return, the payoff for the investments in AI. It's, I don't know, one kind of has to have the other. So it's like, that's something I haven't quite figured out in my head, but
I've been thinking a lot about that. Is it just like a self-correcting mechanism where things eventually just kind of level out and these companies are like, well, I guess we can't automate everything, because no one can afford to buy our stuff. I don't know. I've been thinking about that a ton.
Well, I think AI is going to be extremely deflationary for a lot of things. Like, just think of the cost of like a Waymo ride. When you remove the driver, I mean, what does that remove? At least half the cost, maybe. So maybe things just get really, really cheap.
I'm also thinking a lot about like where we have shortages in the labor market. Like, I know we have personal experiences with the trades, right? There's like shortages of getting plumbers out and getting affordable work done on your home, or I think that this could just push people to the trades, like force them into it. And then yeah, maybe there's a possibility that we have an oversupply of trade workers. So I don't really know how that shakes out, but that's I'm starting to hear more and more people, more and more younger people are foregoing college and moving into learning how to become an electrician, things like that. So I think that's kind of the direction we're probably going to head, especially if you're coming out of college and you can't get a job. But we really need electricians and other trades. So
yeah, it's interesting to kind of think through these scenarios in the long run, and there's so many variables that obviously it's impossible to predict. But what I think we're best at is looking at the short to medium term and like kind of seeing trends and like, placing bets on those in stocks and crypto. And so one thing I wanted to do today was look at like just some examples of some of the biggest winners and the losers, and talk about, I guess, maybe what the trends are that you guys are seeing, and where you're seeing the biggest moves and maybe the biggest opportunity. And I think a lot of people can learn through not just our winners, but also the losers, and like maybe even shed some light on like how you guys have found some of these plays and like what they've looked like, and maybe, yeah, what you're looking forward to as we go into like Q4 here.
yeah, essentially this has been a quote unquote cycle. Is that what you're saying, Chris? How we've traded the cycle and kind of managed it as investors?
Yeah, because like Trav was saying earlier, this is like the third big year in stocks, right? And it's also it's interesting how Bitcoin has been really correlated with stocks. So like 2022 obviously was a pullback year, and then 23, 24, and 25 have just been like outstanding years on a percentage basis, right? And when you look at Bitcoin, it's like, wow, there's actually a lot of correlation there. And that's why I've said over the last several months and quarters that my thesis for Bitcoin is that, maybe next year isn't a bear market year if stocks keep going up. I know we've got the 4-year market cycle, and that could be, and it has a highly likelihood of being a self-fulfilling prophecy. But also, if stocks have some kind of like parabolic year in 2026, I think Bitcoin might go along with it. So yeah, I mean, just so far this cycle, and specifically this year, right? Because we did have a big pullback, kind of intra year. So if we go back to like a monthly chart, we did have the whole like panic in the spring over the tariff situation, which I know you guys took a lot of advantage of, dip buying, and Nikki, you helping your clients do that, and they're just kicking butt this year too. And I know in crypto we had some opportunity there as well. But like, what would you say, I guess, yeah, going back through the spring, what has worked during this time frame, and also what hasn't worked, and what are the themes or the areas where you've maybe lost money, or it's been a big wah, and then what has like overperformed or outperformed, and I guess where do you see things heading into the end of the year as well?
Trav, I think you should start because you've just kicked ass this year with trading. I'm like, Trav, teach me how to trade. I mean,
yeah.
I've
Trav,
watched
where are you this year so far? Like, I know you're kicking the shit out of the S&P, but do you know where you are year to date?
Yeah, let me take a look here real time. Yeah, up about 45% on the 100K portfolio, and I actually have a little bit of a higher return in a couple of my other riskier like taxable accounts. But the being on X or Twitter or whatever we're calling it will make you still feel like you're not doing enough, because like all the profit screenshots out there, there's people posting, oh, I went from 800K to 11 million this year, or I went from 3 million to 20 million. It's we're starting to see a lot of those pop up, and some of those numbers are pretty outrageous. Like a lot of people now posting numbers where they're up into the 7, 8, 9 figures. It's pretty crazy. But I think I'm happy to be up 45%, especially with like the lower net exposure that I've had in the in the 100K portfolio. I've been sitting on a pretty heavy cash balance all year and still been able to put up those numbers. Talked about risk adjusted measures like Sharpe or Sortino ratios that look really, really good, and just even beating the S&P 500 and the Nasdaq consistently is obviously a really good achievement. So the things that I've noticed though, coming into the year, And there's a lot of different ways to make money, especially in a market like this. It seems like you can almost throw a dart and make money. But what I've noticed like consistently this year and even last year is that themes have been a big part of the market performance. And so themes that are in vogue are driving baskets of stocks, so it's not just like individual stocks that you have to find outperform. It's just really finding what the market's excited about. And so AI has been a big one over the last few years. And that's really what I took advantage of during the sell off in April is I used that as an opportunity to buy stocks like Micron and TSM, basically at like half or 1/3 of where they trade today. Some of those prices I thought had gotten just really insane in April because we knew that the demand for AI was going to continue, whether or not you had, tariff impacts or whatever. These were the stocks. These were the winning stocks that were leading the market not only last year, but through the April timeframe, and then they all got whacked. And so that to me was like a very obvious way to just take advantage of a sell-off, knowing that you might not time the bottom perfectly, but you have a long enough time horizon on these things, and like these are going to be the leaders when the market turns back up. And so that was a big driver of returns for me. Has been a big driver of returns. I'm still taking profits on stuff like Micron lately, which is now up over 200% from average cost. But identifying those themes has been really important this year. Obviously, there's some other hotter themes now, like quantum computing recently. You could have had 10 baggers on your hand if you'd bought those early enough, or some of the space stocks like Rocket Lab. Some of the fintechs, some of the rare earth plays, anything that was in the Trump orbit benefiting from Trump family deals or U.S. government deals recently, whether that's like Intel or MP Materials, stocks like that. So I think themes have become a very important driver of returns. Now, what we learned from 2021 is themes often take a lot of these names like way higher than they should go, probably because you have a lot of excitement, a lot of valuations. All stocks in the basket get bid up kind of regardless of fundamentals. And so these can be some of the worst performers coming out of the bull market. When you peak out, I'm guessing some of these quantum stocks and these SMR stocks will be down at least 60%, if not as much as like 90 to 95% if we fast forward like 3 years from now. So you do have to be careful. But when things are working, when you have the momentum, when the bull market's working, I think like identifying those themes and then finding plays within those themes that could be the next to pop off, kind of like popcorn season when it comes to crypto alts. And a recent example of that was CleanSpark. CleanSpark. So we're getting these big AI deals announced by NVIDIA and CoreWeave and Oracle with OpenAI, and you've got OpenAI signing a big deal recently with AMD. And these are driving huge moves in large cap stocks, but they're also driving moves among smaller stocks. And so looking at some of the crypto miners, which have been underperforming like CleanSpark, they sit on a pretty nice sized portfolio of data centers essentially that are using to run crypto mining, but that also have long-term power agreements. And so I was looking at some of those and saying, all it would take, I think, is for some of these crypto miners to shift some capacity over. You already have a couple examples out there of companies like Iron that did this, whose stocks have just gone parabolic. So maybe some of these laggards like CleanSpark or Mara, look at that and they go, oh yeah, maybe we should convert some of that capacity. Our stock will be up 50% on the day we announce a deal. And so I was hunting for a play there, and that's where kind of got into some CleanSpark calls just I think around like a month ago, and now those calls are up over 600%, and I've been taking some profit along the way. But yeah, again, that just kind of shows you like finding opportunities within the themes. And there's just so much opportunity, I think, to continue to do that. Now, some things are overextended, but I think that's one good way to like taking advantage of a momentum market like this is just having lots of watch lists, tracking the different themes, and figuring out and doing work to figure out which ones could be next.
I think an
I love it,
important
man.
like comment to piggyback off of that is I think a lot of people after 2021 and now 2025 need to realize that if you are just looking at valuation alone and ignoring a basket of stocks or an industry or whatever because the valuation is too high, I feel like those days are over. You can absolutely have amazing opportunities off of momentum on things that are absolutely just concept or completely overvalued. Trav, you come from being a value investor and here you are slinging, pre-rev or low rev companies trading at like 30 billion valuations and stuff like that. So it's like, I feel like you've kind of learned how to work with that as well and how to work with the momentum when valuation doesn't make any sense. Sometimes it just doesn't matter.
Yeah, and I like when it all lines up. When you can find something where it's like, you've either got a correction in something that had momentum, or it's something where you identify that there's some backstop to the value. Like I'm actually not out there buying any of these quantum stocks like IonQ, Rigetti, et cetera. I'm actually trying to take some shots on the short side, which if we're talking about losers, that has not worked yet. It has not worked out for me yet. I tried my hand at some Oklo puts and put spreads. I tried my hand at some Rigetti put spreads. Those are not working yet. So they're costing me a little bit of performance in the short run. But I do think like finding companies that have like an existing, say an existing, pretty decent fundamental basis, right? Like they're generating profitability or cash flows. Maybe the stock is a little bit overvalued in the short run, but because it's in such a hot theme, you can take a swing. Or like something like Micron, I was literally buying it. I think it had effectively like 7 times earnings in the April correction. So it's like, okay, what's my downside here? Maybe it doesn't catch the hot bid. Maybe AI like fizzles out a little bit this year. But what is my downside if I'm buying it at 7 times earnings? It's probably not that bad. And so, yeah, sometimes, I try to combine that momentum with the fundamental. That's probably the best description of my style this year, because again, like you said, blindly buying just cheap stocks is not really working. It hasn't worked for the better part of the last decade. So being able to acknowledge that, I think is important. And, look, I've got a couple of dogs in my portfolio, or not dogs, but maybe like value stocks still in the portfolio, small position sizes, that kind of sit there and don't do a whole lot. Etsy being an example, or stuff like that, where it's like, okay, you buy it at 8 times cash flow. There's not an obvious catalyst in the near term. Maybe you get that, and then you get this double out of the stock in a couple of years. But I just don't want to make that all of my portfolio, because the pure value approach has definitely not worked. So I think incorporating momentum into the value approach or the fundamental approach, that's what's working for me. But the people that are just pure momentum are probably outperforming me right now. So it's like, find your style, find what works, and then, protect your gains, and it all works out.
The other key with that is knowing your environment and being quick to take outsized profits in environments like this, like with the crappy companies that are flying or whatever it is. Be quick, because these times don't stay like this forever, as we've learned in 2021. Sorry,
well
Chris.
said.
Go
well
ahead.
said.
Yeah, great points, guys. In crypto, we have a saying called "Don't get fundamentaled," meaning usually what that means is like, don't buy the bullshit. Like people will ask me sometimes in the community, they'll say, "Hey, Chris, here's this new ticker, this new project. They're doing XYZ. They're claiming that they're going to partner with blah, blah, blah." And I say, okay, just stop right there. None of that shit matters. Like, okay, don't get fundamental. Don't look at the pitch deck and think that this thing's going to change the world, because the odds of it actually working are very, very small. And you don't have to know that stuff or be right to make money. Just focus on the chart, because the truth is usually in the chart. And so for stocks, I would say like, it's kind of the opposite, where like, don't get fundamentaled might mean like, don't look at a company that's doing so well and is so expensive and then thinking that there's no opportunity in it. So like, I'll show you an example. So like Palantir, right? Like this thing was nuts when it broke out of the multi-year range above like $50, right? It got really expensive really fast. And then it went from 50 and it's close to like 200 now, right? So if you got fundamentaled and you got scared out, you would see zero opportunity in this momentum trend, right? And now I didn't take this trade, but this is just an example of how, like, if you combine the technicals with the fundamentals, you can actually find trade setups that are profitable and have a high likelihood of working, even if valuations look stupid, right? So like this was a squeeze setup back here in July that actually ended up working beautifully. It triggered around like the 130s. And then, today you're up at the 180s. So like, had you gotten fundamentaled and gotten scared out of it, you would have stayed out of this. So like maybe a good strategy is, and I know this is part of what you guys do, but for anybody listening, it's like, find companies that are doing well, even if they're overvalued. If you get a technical setup with good risk to reward on it, there's still could be a lot of upside opportunity, because as we know, I mean, trends go much longer than they seem reasonable. And if you can just get your bias out of the way and just focus on the technicals, there can be a lot of profit in those moves. And
Yeah.
we see that in crypto too, because like on the upside, if a crypto is hot and working, it's like the market cap might sound insane, billions and billions of dollars. And you're like, what is this thing really worth? And at the end of the day, it's like, it doesn't matter. The main thing that matters, at least in the short to medium term, is the momentum and the chart. Now, eventually, most of them will die and crater to zero. So you don't want to become a bag holder. But it's like if you're trading momentum, those are the times where you can make a ton of money. And like, as we said earlier, like there hasn't been a ton of follow through and momentum in crypto yet. But the market is actually signaling that it's close. And my thesis for you guys that remember, like, I think it was earlier in the year, I said, look, if the Russell breaks out, I think small cap cryptos are going with it. Meaning if small cap stocks break multi-year or really all-time highs, I think like altcoins could do that too. And it's funny because right now you've got the alt charts that are testing all-time highs at the exact same time as the Russell 2000 small cap index. So that thesis is kind of looking like it's right on the edge of working. So I think over the next couple of weeks, we're going to know pretty quick, like if we're going into a parabolic, just like 2021 type market or even crazier, or if this is yet another trap at all-time highs. So I've been like dialed in every day, just kind of looking and waiting and watching for signs of like which one of those scenarios is actually playing out. So I think the next couple of weeks will be very telling. What do you guys think?
I will say, I feel like Bitcoin has more of a leg to stand on for a run further from here and more upside. And the S&P/NASDAQ feel very due for a rollover and correction. So the question becomes, I think that the indices are more likely to roll over sooner than later. And I'm not talking we're going into a bear market. I'm not even talking a 10% correction. I'm talking maybe we get 5% or 7%, something like that, right? Like I'm not talking anything crazy. But can Bitcoin, because Bitcoin is so beautifully set up after pulling back and consolidating while things were kind of running in stocks, I don't know. Can it be independent? Can it be thinking for itself while the S&P takes a cool down sesh? So that's something I've been thinking about. I think Bitcoin is better positioned for that disconnect from the indices, essentially bifurcation, or whatever you want to call
I would love to see that. I mean, we know stocks have been in this slow grinding bull market for 6 months, and Bitcoin's been stair stepping its way up, but there hasn't been like a parabolic top or any kind of like acceleration of the trend. So that would actually be really cool to see. I would love to see, stocks pull back and then Bitcoin say, nope, I'm going to break the trend and kind of trade according to my own momentum.
I'd personally love to see a really nutty alt season in crypto. It's just more fun. You get stuff like Altcoin and, like just insane stories of people generating wealth.
What's old Fartcoin doing these days?
Memes have just kind of been bleeding out, and you've got some that are doing okay, but like, we're not in like a total like degenerate risk on market environment. It's been, most of the crypto space has been chasing like the hot token of the month kind of thing. So it's like you'll have one or two that just go absolutely bonkers while everything else is kind of bleeding out. And, again, we'll talk about some of the larger caps, like, ETH, which is still holding up. I've got a long going here, and this is the 7th attempt at staying above 4K. And we've actually turned 4K from resistance into support, and we've had 4 tags of 5K over the last couple of months. So if anything's going to go nuts, I think ETH would be one of the ones to kind of lead the pack. Not only is it a large cap that's a legacy coin that's been around for about a decade, but it's it's also recovered quite well, but it's also a pain in the ass to trade at the same time because it's trapped so many times. So I don't know. I'm holding like multiple beliefs in my head at the same time. But yeah, I mean, we're just waiting and watching like this resistance. Like, is this going to trap, or is this going to lead to another 6 to 12 months of just awesome, insane, like profitable market environment?
I feel like people were kind of leaving ETH for dead and sick of it for a bit, right? Selling, getting out when things were looking pretty bad not that long ago. Has anything fundamentally changed to where people are like, yeah, we're getting back in ETH. I shouldn't have sold those shares, or sorry, coins. Like, did something fundamentally shift with ETH here?
Well, the big thing is, just Tom Lee and, basically trying to do the treasury idea that has been part of Bitcoin's success this year, trying to do that with ETH. Prior to that, yeah, like I had a trade that I just got frustrated with. Like, we had a breakout here at 2K. And then I held through multiple pullbacks. And then finally, when it looked like the ETH Foundation was just milking and basically stealing, I just around 3K, I was like, okay, I can't take this anymore. Just get me out. And then there was a big dump back below 2K, and then this V bottom. And I didn't buy anywhere near these lows. I bought kind of mid-range on the breakout. And so fundamentally, no, I guess perception wise and market sentiment and maybe even like capital flow wise, like there has been a change. But yeah, I don't know. It's just ETH is a relatively small percentage of my longer term portfolio compared to Bitcoin. And I've used it as a vehicle for trading to accumulate stuff. Like, I bought a house with ETH profits. I stack more cash. So it's just been a trading vehicle for me, but it has actually held up, but it hasn't even exceeded its 2021 all-time high. It tagged it, but it hasn't still exceeded that. So where Bitcoin is significantly above its 2021 all-time high, ETH is still a relative underperformer. So yeah, I don't know. I mean, it's been, I would say this market cycle for altcoin traders has been less exciting than prior market cycles. But the game's not over, like we still could have some pretty insane action over the next few quarters. So that's what I'm looking for. And that's what I know a lot of people in the community are waiting for. It's like, okay, alts, poking it with a stick, like, let's go. And I know a lot of people, that were in the community that were crypto only have gone more into the stock side this year. And because of that, they made a lot of money. So, kudos to people that have done that. And kudos, Trav, to you for kind of guiding the way. And yeah, and Nick, I was going to ask you, I know you've been less active on the trading side because you've just, I guess, crossed your year mark with your wealth advisory business, and you've taken on a lot of clients there. So you've had less time to actively trade. But maybe, do you want to talk about some of your plays, or I guess some of your perspective over this year, how you've done or what you've seen?
Yeah. So haven't done as well as Trav, that's for sure. I feel like granted, I have had my focus very, shifted over the past year for multiple reasons, personal life things, starting a new business. So my focus has been shifted, and I have to give myself grace for that. And I think a lot of people can relate to that. So don't kick yourself too much if don't feel like you've taken advantage of this cycle. But I did some things right. And this is me talking about my own personal investing. This isn't financial advice or um, any of that. But personally, like, I nailed Robinhood. I was super happy. I'm still holding it. I've been able to take profit not far from where we're at today. Like, multi-bagger, amazing, amazing trade. So really happy with that. Nailed Wayfair. I was actually early on Wayfair, but I ended up averaging down. So I know Trav was in this as well, and it was kind of on our watch as like a short squeeze, because it was highly shorted at the time. However, my short-term trading, I think I was looking in the wrong places. Trav was like super focused on all all the right places. And I was still like, I just don't think that I was focused in that sense. And I was looking at, bull as a sympathy play to Robin Hood, but that didn't work at all. And it's
Why didn't that work? Like because the chart was looking like a good accumulation range.
I
What
know.
happened to the business, or why was it not a good sympathy play?
Honestly, probably something with the fundamentals. I haven't dug too far into it because it really was like a swing trade for me, not so
Oh,
much a
gotcha.
long-term investment. But I thought, well, okay, they have a working business here. It's a popular brokerage internationally, right? With many other countries, typically like Asian countries. So I thought with Hood doing what it was doing, there could be a sympathy play opportunity there. It just did not work. So that was a fail. And getting a call. Okay. Uh and then the other thing that I did wrong is just trying to pick short squeezes and trying to pick things in the retail space. And the retail space is not it right now. And that's been my bread and butter for many years, right? Is retail stocks, the Lulus, the Walmarts, the Abercrombie and Fitches, and I that's been my bread and butter, and I've done really well with it, but it's out of favor, and things are changing, and competition is heating up, and you learn these lessons, and you adjust, and you adapt, and pivot. So that's kind of where I'm at. I'm looking at what I felt like I did wrong, where my focus was when it shouldn't have been, and just kind of moving on. I had winners, I had multi-backers, so I can't beat myself too much, but I definitely didn't zone in enough to the AI.
Hmm.
With my own personal portfolio is what I'm talking about.
Yeah, and I guess, with your clients and with your longer term stuff, you were in the spring like buying in the trenches along with Trav. So
Yeah,
that was a good play.
absolutely. The 20% correction that we had in April was absolutely an amazing opportunity for passive investors, active investors. It was great. Um, will we see one of those anytime soon? I don't know, but it was fun while it lasted. And
Cool.
now it's just a lot of people are just positioned well now for this run. Which is exciting. Like watching the assets just continue to go up and make new high after new high. It's a very exciting time right now to be an investor. But at the same time, from a trader perspective, knowing what happens in these euphoric environments, your antenna goes up a little bit, and you want to play that right as well, and not get yourself into too much trouble from the short term side of things, the
Mhm.
active short term trader.
Yeah, Trav, how are you feeling going into the end of the year? Like doing really well, but still having a lot of cash? Like, is it something where you're just like trying to get fully invested, or I know you're taking some shots at some shorts or some hedges. Like, are you just going to keep riding it until we get a parabolic blow off top? What are your thoughts?
Yeah, I mean, I've kind of got a little bit of a barbell approach going, which is like heavy cash, but still taking aggressive, bullish shots on stuff, and still looking for, my style is also a little bit different than a pure momentum or even pure fundamental in that I'm trying to find kind of undiscovered areas of the market that I think will be more interesting or we'll see a sentiment shift in the future. So like, caught a big pop there in the cannabis sector recently would be an example. Another example is like I'm working on a thesis on software stocks right now, and I've just started to accumulate my first positions there in that area. There's a lot of software stocks that are beat up that are seen as like AI losers that I think I have kind of a counter trend thesis right now going, where I think in a year or two's time frame, people will view that a little differently, at least for some of these companies. So yeah, I'm trying to still think about like what will the market get excited about in a year or two. We know that there's always going to be a bull market in something. So even if the market has a big pullback, even if momentum has a big sell off, the quantum names get smashed like I expect them to at some point. There's going to be other stuff that people are going to move on to, that the retail traders are going to move on to, that the market will shift to. And even if AI winners like Nvidia start to cool off, or the AI bubble starts to cool off, like there could be other parts of the chain that start to shift. Maybe it moves from infrastructure plays to software plays, things like that. So I'm always trying to anticipate what are people going to get excited about in a year or two, what individual stocks like are viewed in the what I think could be unfairly viewed right now that the market may love in a couple months or a couple years. So I'm doing a lot of that right now. I'm doing a lot of research, trying to figure out what's unloved. There's not a lot of unloved areas of the market right now, to be honest, but there are some. And so I'm going into those areas and trying to figure out, okay, is there a thesis that might make sense here? Is there something the market's overlooking? So I do a lot of that in times like this. I am still taking a few shots on the short side, but I'm trying not to get too heavy in betting against a market that's got this much momentum. And so the bets against like Quantum and SMRs have been pretty small so far. I would love to make profits on the short side if we do get another rollover like we got in 21, 22, where we actually do end up eventually going into a bear market. I want to actually see my portfolio grow during that time frame. So I am watching like a hawk to see if like there is going to be an opportunity at some point to make money on the bear side of this. But I don't think we're quite there yet. So even though I've been taking small shots in bearish plays, again, I'm not trying to get too heavily bearish. Watching the price action, respecting the price action. So yeah, that's how I describe the overall strategy as like cash heavy, still taking some shots, trying to develop counter trend theses that I think could provide upside in the year ahead, and not trying to get too bared up so that I put myself in like a too counter to the overall market.
Cool. Oh yeah, man. Anything people should be thinking about over the next week or two? I know, the government shutdown situation is, who knows how long that'll last. What else?
We get earnings kicking off here in about a week or two. It's really when, I'd say probably really 2 weeks from now is when it starts to get into heavy earnings reporting mode. But some of the banks will start reporting next week. But we do get earnings reporting season as we move into mid and late October and early November as well. So that'll take the focus on the stock side, probably even more so than the government stuff. Earnings season provides a lot of fireworks in terms of individual stock moves, and yeah, that's going to be.
What wasn't Trump trying to push for 6-month earnings instead of quarterly?
Yeah, and the SEC's actually taking that seriously, and they're looking at that. I kind of hate that. Yeah, I kind of hate that.
I don't like it.
Yeah.
Why, too delayed or what?
Yeah, it's so the argument for it is that not having to report every quarter means companies can have a little bit more long-term thinking. They don't have to worry about all the details of preparing quarterly reports, preparing for quarterly calls. That quarterly cycle can be kind of vicious for companies. However, I don't think reporting semi-annually really changes the workload that much. And also, it gives investors, particularly retail investors, a lot less information to work with. And so what would happen is we'll get, like, if you only get 2 reports a year instead of 4 reports a year, what's going to happen is institutional investors that pay $50,000 for credit card data and get access to real-time data are going to know what's happening with those companies a lot more than retail investors, and so retail investors will be disadvantaged. You'll also have really nasty moves around those 2 earnings reports. We already have big moves that happen for earnings reports 4 times a year. If you actually put the information into just 2 reports instead of 4, you're going to have huge, massive gap ups and gap downs in stocks, which is going to create more volatility around those 2 earnings reports. And then I just think companies that only have to report twice a year, there's a lot of management teams and board of directors that need to be held accountable to their investors when things are not going right. And so if you allow them to wait 6 months, if things are not going well, 3, 4, 5 months in, but they still haven't reported to investors yet, there's a lot of like nefarious things that can go on in the executive suite, and executives who feel like they can ignore investors, the fewer times they have to report. So I don't know, for me, the benefits don't outweigh the benefits of having them only report twice a year don't outweigh all the advantages we get of having that information.
So it sounds like what you're saying is, if that does go through, we're just going to have to stop actually trading and really just lean on Nancy Pelosi's picks, because she's going to have such a huge information advantage over the average guy.
Yes, and that's true. Insiders with insider information, and hedge funds who can afford to pay very, very high amounts for real-time credit card data will have an informational advantage over all the other investors out there. And I just don't think that's what we want in our markets.
Well said. All right. Cool. Nick, what else? Anything else you want to talk about before we wrap it up?
I'm doing a class for the community Friday, and we're going to be diving into a lot of historic price action to try to find cues of, when this rollover or is going to happen potentially, or what to look for to know when to flip from bullish to maybe a little bit more cautious or even bearish. So we'll be doing that on Friday. If anyone's in the community, if you're not in the community, get in now. You can come to class Friday. And yeah, it'll be a really good class for people that have been unsure what to do next, feeling a little frozen.
Yeah, that'll be a good one. Very timely.
Yeah.
All right. Well, yeah, I mean, as far as what I'm focused on is really just waiting on Bitcoin at this 125 zone, watching the all-time high on the alt charts. And if we get a big like breakout day on the Russell, I think alts will go with it. But also it could trap here. So I don't know. We're at a very strong decision zone that I'm just kind of like, I want to press fast forward on. But the market doesn't give a damn about my time preference, unfortunately. So just waiting.
Yeah.
All right. Well, guys, thanks for joining us. Go to wetalkmoney.com/community if you want to get into the wealth building community and join Nikki on Friday. And yeah, leave us a review. Share this with anybody that's doing any dumb shit in the markets, or if they need more guidance, or if they need some help or insights. And yeah, we will see you guys next time.
See
Thanks,
ya.
guys.
Cheers.